Welcome for another good lesson, and maybe you're just new to my channel. I would kindly encourage you to subscribe so that you can be able to access more videos as we continue uploading. Now, our area of concern today, I want us to actually look at how you can prepare a statement reconciling the sales ledger total with the sales ledger control account. Like you're told that from the question, at the end of March 2010, the balances appearing in the sales ledger totaled to 92,750 on the debit side, and the balances in the sales ledger control account was 99,050. That is on the debit side in both cases. So it means that we can realize that these two balances are different, while they're supposed to be the same. But we are told again that an investigation of the differences reveal the following errors. So we have some particular errors here that you're supposed to look at how to correct and be able to actually have the same balances in both of these books. Now, we are talking about sales ledger account and sales ledger control account. Both of them, they relate to what is known as credit sales, whereby sales are made and not paid. There is deferred payment in that particular case. The sales are paid for at a later date. Now, when we make credit sales, we record them in the sales ledger. And under the sales ledger, we have the individual debtors. These are the people who owe the business amount of money. And let's say, for example, we debit this debtors account with the respective amounts whose amount of goods have been sold to them. We were supposed to get the total. The total of the individual accounts are supposed to be transferred to the respective side of the sales ledger control account, which is actually a summary of these debtors account. So it means that if we have a debit balance, they're supposed to be debited as well. While if they're a credit balance, it means they should also be credited in that particular sense. Now, from our question, we will realize that we have some items which are only supposed to be affecting the sales ledger. In other words, they should either be increasing the sales ledger or decreasing the sales ledger. And some items will only affect the sales ledger control account. So we actually the first step we are going to do is we are going to do a correction of the sales ledger control account. That is these amounts which were supposed to be transferred from the sales ledger account to the sales ledger control account, but were not affected in the process. Like if you say, for example, a copy invoice for 800 has been posted to a customer's account as 80 shillings. Now in this case, you find that if an invoice is supposed to be has been posted at 80 shillings instead of 800 shillings, it means that there is an under posting of that particular amount. So if you look at 800 versus 80 shillings, it means there's an under posting of 720, which is actually the difference between the two. And this particular amount, it means it is reducing what is in the sales ledger, and therefore it means that the amount is supposed to be added. It will be added back to the sales ledger to make it the original or the correct entry. Then number 2, so this is part A. We talk about part B. We see what happens. A copy credit note for 20 shillings has been debited to a customer account. Now, when do we have a credit note? We have a credit note under circumstances where a customer's account had been undercharged. Had been overcharged. And therefore, we are trying to reduce that customer's account. Now, you see, the note was 220 shillings. So it means that a wrong figure was reflected on the debit side instead of the credit side. So it means for us to correct this particular error, we are supposed to cancel. We're supposed to cancel the debit entry of 220 first, and then make the correct entry of 220. In other words, we are going to enter an amount of 440, that is this one times 2. Where? On the credit side. In that case, it is supposed to be less. Because the account of this customer was debited wrongly, it means the account was increased. So we are supposed to reduce that account. And the first 200 which is supposed to be reduced is correcting the error made, and then the second 200 is making the correct entry. That is part B. Then we go to C and see what happens. So C says, a discount allowed of 140 shillings shown on the daily cash sheet has not been posted to the customer's account. Again, now you see, discount allowed actually reduces what customers are supposed to pay, and they were not shown. And in fact, that is why the balance in this particular sales ledger account is still low. So it's supposed to be actually increasing. It's supposed to be reducing what is on the debit side. And for that matter, C is supposed to be our amount of 140 shillings, which is actually a discount that is omitted. So we are going to include it by subtracting it from the total. Then we go to D. So if you talk about D, we are referring to an invoice for 1,350 for J. Brown has been posted to the debit of R. Brown's account. Now, this is a type of an entry which involves an error of posting to a wrong personal account. So you see, there is no effect because they belong to the same class of account, and therefore D, there is no entry to be made. Remember, these both accounts, they fall under the same class, and they were made to the debit the same side. So it means there is no error entry. There is no effect. It is an error. It is an error committed, but there is no effect on the total of the sales ledger. Then we go to E again. So if you talk about E, we are told that two debit balances for 50 and 270 have been omitted from the list extracted from the sales ledger. Now, debit balances are supposed to increase. They are supposed to increase what is in the sales ledger control account. The total there is supposed to be 720 when you add the two. So if they are omitted, it means that they are supposed to be added. Because actually debit balances have a debit entry. Then you go to F, and this is what F says. An account for 1,000 in the sales ledger has been settled by contra entry to the purchase ledger. Now, F. Contra entry means an account. Contra entry means an entry whose transactions leads or comes as a result of a decrease in either the sales ledger control account, leading to the increase of the other account, or decrease in purchases ledger, leading to an increase in sales ledger control account. And because the amount is 110 shillings, it's supposed to be, this particular amount is supposed to be less. And when it is less, it means that it's supposed to be shown as a reduction in what is in the sales ledger. So it's supposed to be shown on the credit side. Then we go to G. A balance of 590 in sales ledger account has been written off as a recovery but has not been entered through the transfer journal. Now this one, 590 shillings is balance bad debts. This is bad debts written off. This is an amount whose debtors have failed to pay. But now you see it has not been transferred to the sales ledger control account. So it means that this account is supposed to be credited because it actually reduces what debtors are supposed to pay. I said any amount that reduces what debtors are supposed to pay are supposed to be credited, and therefore it will be credited on the sales ledger control account. Then we go to H, and H says the copy invoice were over added by 3,250. Now we are supposed to have a limit of invoices over overcast. To overcast means to state a high amount than what is supposed to be, and the amount was 350,000. Now you see invoices normally states what customers are supposed to pay, and therefore it means there was an overcast. An overcast means there was an overstatement of what customers ought to pay, and in this case we are supposed to issue a credit note alerting the customers that their account is being reduced and therefore is being credited. So this one will be shown on the sales ledger control account as the credit balance. Then we go to the last one. Cash of 250 shillings paid in settlement of a customer's credit balance has been entered on the wrong side of the customer's account. Now you see this is the amount which is being received. So I is an amount which is being received of 250, but it was entered on the wrong side. So if an amount is received, it means it's supposed to be debited. So if it was made on the wrong side, it means that this amount was credited. So to correct this error, we make the first entry to correct the credit side and the second entry of 250 to make the correct entry on the debit side. In other words, we are going to debit an amount of 500 in the sales ledger, and debiting the sales ledger control account in this sales ledger account is the same as adding this particular amount, and that is how we are going to work our figures. So I want us now to start by correcting the sales ledger control account, and we start correcting by debiting. It had a debit balance of 99,000 and 50 shillings. So this one is supposed to be debited, sorry. So the date was on March 2010. So 2010 March 31st, we had balance brought down of an amount of 99,500. And then we're supposed to show those transfer entries which were supposed to reduce this account but were not reflected. And as I said, the first one is supposed to be the contra entry which was made on 31st. That one should be on an account for 1,100 in the sales ledger has been settled by contra entry. So it means that we are supposed to, on March 31st, we should have a contra entry of an amount of 1,100 shillings, which is supposed to reduce the sales ledger as well as the sales ledger control account. They're supposed to be credited. Then again we go to a balance of 550. The sales ledger account has been written off. So written off means it is reducing what debtors are supposed to pay. Therefore, we are supposed to credit one bad debts. So we are supposed to have bad debts, which are actually written off, and the amount is 590. Then we go to another invoice, which was there was an overcast of 3,250. An overcast means there was excess that was put which customers ought to have paid, which in the real sense was not the case. So we are supposed to reduce the sales ledger as well, and when you reduce it means we credit, and therefore we show the same credit entry on the sales ledger control account. So we have an invoice which was an overcast or was overstated by an amount of 3,250. Then of course the last entry that you're supposed to have is, so there's no other entry under sales ledger control account, this one will be sales ledger account. So we are supposed to get the total. We are supposed to balance this account. And balancing the account means we are going to get the total on both sides. Like here, the total here is 99,050. And if you talk about this one, it should be 1,100 plus 590 plus 3,250. Now this one is the total of on the credit side. We get the account balance by subtracting the two. So 99,050 minus the answer is supposed to be 94. This one is the account balance, 94,110. This is balance which is supposed to be carried down. When you add these two, is supposed to give us 99,500. We confirm they are the same by double underlining. Then we break it down, 94,110. I'll give it a name as balance brought down. Now, this is the balance as per the corrected sales ledger control account, which should be the same as the statement reconciling the sales ledger with the corrected sales ledger control account. So we are going to have entries which were supposed to be added or which were supposed to be credited to the sales ledger and were not done the correct entry. Like the first one, we have A. A is essentially supposed to be, we are supposed to have a copy invoice for 800 has been posted to the customer's account as 80. Like I said before, the difference is 720, which you're supposed to debit to make it an increase. Now, first of all, you're supposed to have the balance of this sales ledger as per given in the equation. And in the equation tells us that it has a debit balance of 92,750. So we're supposed to have balance as per the equation. As per the equation, which is essentially 92,750. So there's no element of debit and credit in this particular reconciliation. We are simply trying to create another column for additions and subtractions. So we are supposed to add any item which are supposed to be part of this, which actually makes it not to be agree with the total of the sales ledger control account of 98,050. So we are supposed to add any item which is not reflected. And the first one is the invoice underposted. The first one. 80 instead of 800, the difference is 720, which is lucky. So we add the first one, which is the invoice underposted. And this invoice was an amount of 720. Again, we are supposed to add, if you look at, we have talked about B, we have used B, it was affecting the sales ledger control account. If you talk about C, it has affected the sales ledger control account. Then I said D is not affecting any account because they are in the same class of account. Then E is a debit balance of total was 720, which had been omitted. So we are supposed to add because actually it is a debit balance which increases what is in the sales ledger. So debit balance which was omitted an amount of 720, which is actually 450 plus 270. And then of course we had another one was an amount to do with cash of 250 paid in the settlement of an account. Like I said, the cash of 250, we make the first 250 by cancelling the error and the other 250 for the correct entry. So in total we're supposed to make a debit entry of 500 for correcting and for making the correct entry. So it's supposed to be an amount of discount which was allowed but was omitted. The bracket is saying this one was omitted. The amount was 500. Of course, the total of this one is supposed to be 720 plus 720 plus 500 is supposed to be 1,940. Total, when you add the two, so plus the balance as per the sales ledger is supposed to be 750, 92,750, which is actually an amount of 94,690. After this, we are supposed to less. We less items items which were supposed to have reduced the sales ledger account but were not entered. Then we have B here. A copied credit note for 250 has been debited to a customer account. Again, I said that we're supposed to have the first entry as credit note which was debited incorrectly. How? We are told that a copy credit note for 220 has been debited to a customer account. This amount is supposed to be credited to reduce the account due to overpayment. So you make an amount of 440, we less an amount of 440. The first 220 is correcting the entry. I mean, the first entry is supposed to cancel the entry, and then the second 220 is supposed to make the correct entry on the credit side. And again, the second amount to be less is supposed to be C, discount allowed of 140 shown on the cash has not been posted to the customer account. Discount allowed is supposed to reduce what customers pay, so it's supposed to be less. We less discount allowed, which was actually omitted, and the amount was 140. The total of this one to be less is 580 shillings. So when we less 94,690 from 580, less 580, we get an amount of 94,110. Now we can see clearly that the balance as per the reconciliation, which is 94,110, is the same as the balance brought down, 94,110. So it means that we have accurately entered our entries. And this one means that if this balance was brought down, it means it was being taken. Because it is a debit balance, this is the balance which was supposed to have been taken to the sales ledger control account instead of these 99,050. Thank you. If you find this video helpful, kindly subscribe for more to come. Thank you.